Warning, this is all financial advice. You can invest in any way that will make you feel comfortable. This is just a full breakdown of the stock to help you invest into a company that will help you grow your portfolio for the long term. Thank you.
It's time to hone your skills. You'll certainly need it.
Hello guys, my name is Kool-Aid-Man100X. Welcome to Black Money. How you guys doing? Black people, listen, we're going to be reviewing Lowe's. Pretty much like Home Depot, but Lowe's. I'm really thinking they working together. That's just my thing, like Temu, wasn't it? Sheen. I think they're all just one company, just got two different companies. That's just me in general, but whatever. To each his own. We're going to be reviewing Lowe's. The first thing we're going to be looking at is, do they pay dividends? As you see here, they do pay dividends in the currently at 1 point share currently, but makes sense. We're going to go to their dividend. They actually had a growth of 4.30%, which is not good, but 54% growth. So they've been in $1 pretty much. Lowe's has always been good for investments. It's always been a not just satire, but safe. I forgot what they call it when, you got those aristocrats, dividend aristocrats. So yeah, it's one of those. Lows are pretty much always been stable and stagnant all the time anyway. So they actually had growth, which is decent. So you definitely invest in Lowe's for that situation. For the charts too, is 6 months they've been doing pretty bad, but they always been above 200 shares, but they took a big hit, took some hits here too as well for the year. 219 was their lowest, but they upticked there. Took a low hit, but took another big low hit here this year. So, man, this year has really been killing them in a way. 5-year span, decent. They always been decent in a way. They took some big hits though, which is concerning to me. But overall, imagine owning this at 75 cents. Crazy work. Cash flow here. The net income is 1.63 bill, but you can slash that in half. So they're running in a negative here because the operations is 3.35 billion. But if you can see that into the case of the overview, they have 222K people. So, man, I don't get why y'all hire all these people knowing you have to pay for operations to run the company. So y'all taking a big slash on that situation too as well. So we'll take that into account as well. So they're already running in the negative. Change of inventory is negative. You see what I'm saying? It doesn't make sense capital investing. So they're leaning on their own company. We're seeing a negative of 501 million. So they're running that at a low. Very bad. Cash from financing too as well. 2.21 billion and 2.47 billion in their leverage. So they're running at no profit. This is Lowe's. I was expecting Lowe's to be a positive, but they're running at a negative profit, which is ridiculous, by the way. But let's look at the spreadsheet and see what it actually comes about. For the inventory, they got 18.45 bill. They got plenty of inventory, which is cool. The total current assets would be 1.7 bill, which is true. Lowe's is pretty much like Home Depot, but a more stabilized company in a way. They just don't do what Home Depot do. Well, they do exactly what Home Depot do, if you really look at it that way. Prepaid expenses, they did not give us that, which is crazy. Current expenses, which is a bill, 900. So they've been paying their bills now to get back into positive. So right now, for the last 3 years, they've been in the billions. And they just got it down to 972 million, which is decent. So they've been paying back their debts. Total assets is 54. So this is the company. Very good. The long-term debt is what's killing them, 34 billion. So yeah, the operations and the debts and the leases is killing them very badly. So we can actually see that being a hold on the company too as well. So that's crazy work. So let's look at the earnings of this. I think Lowe's has been very good, but you can see they've been stagnant. They actually made 18 And this was back in 2025. So they took a big hit, but you see the numbers, another 18 here. So Lowe's has not been stable. They've been running at a negative profit for years, actually. So that actually puts into consideration as this company is being 210 share. Are they trading Lowe's? They have to be trading it for it to be this high of a price. Let's look at the bearish and the bullish. So legislative tailwinds from the Baptist 26th Street Road to the House Act combined with the trend homeowners choosing renovation over relocation. People out here building houses, bro, with little. That is amazing. I have to understand. People are not buying their. Yo, what's up, guys? This your boy Kool-Aid Man 100X. I want you to hit the link in the description below for my zero investment books. We have a quick sale going on for $7. Link will be in the description below or in the comments below as well, so you can get a chance to get the $7 deal and other things that you want to learn how to invest and take your investing to the next level. So I hope y'all enjoy. I'm gonna catch you guys there. Ready-made homes. People are buying these cheap, beat-up homes and just remodeling them. They reinvent, you can't get mad at people doing that. I don't get why they're upset. And high mortgage rates and environment are expected to symbolize the demand of Lowe's home improvement products and services, reported near terms of the revenue recovery. So you're mad because people are buying the tools and learning to do it themselves, so they won't have to pay anybody to do it, pay a company or stuff like that, because they get their money from the companies they buy their tools and products from. So they're not taking that big load. They got people out here that's working with less and it working. Just like I said with Home Depot, people are updating their homes with the tools that they get from Lowe's and stuff like that, putting windows in themselves, putting floors down themselves, and people are starting to see like, oh, I can do this myself. Oh, I ain't got to pay to do nobody to do this myself, So people are actually taking this an initiative, and it's cutting down mortgage rates, because if you buy a house in the cheap, you buy a jacked up house and renovate it, you ain't got to pay no mortgage. So that actually puts you in a standstill too as well. You don't own anything. So that's my opinion upon it. Precisely let's look at the bears. Precisely the high mortgage rates and the depressed housing turnover continue to surpass the consumer renovation spending. The RBC Capital lowers its price to target, citing difficult outlooks of home improvement category, warning that risk of full-year earnings persist and nowhere near positive. And individual driving meaningful revenue growth. I'm not understanding why Lowe's is mad about this. Why are they mad that people are? I'm not understanding this. You mad because people are not relocating to different homes? You mad about that? I don't get it. This to me, I think this is a very good thing. People are putting, I would say, boots to grounds and making it work with what they got. They're like, all right, I'm gonna buy this beat up house and redo it. You ain't got to pay for a mortgage. You just pay for what you put in it, and that's it. Which is fairly a better idea. If you got something decent to work with it. If you don't. So I don't see why is that a problem for Lowe's? I don't understand that. That's not making any sense to me. Let's look at the consensus. We're here. They said it's a current buy, which is cool. Buy 15, hold 7, no sale. So, Lowe's is a good company to invest in. I don't see how they're running at a negative if people are buying their products, or if I'm not mistaken, if they're outsourcing their products or they're buying them from another company, or they just taking a negative on what they invest into the company as well. Because just like I said, you got over 200K workers. You're already slashing your net profit in half with that situation. So to each his own. Hey, but $200 a share, I think that's a little bit too high to invest in. But ETFs and stuff like that. But what I give you two is the 110 67 times 10 shares. It'll cost you $2,000, $106.70 for only 10 shares. For only 10 shares of Lowe's. You still consider that a good investment too as well. 76 times 50 cost you 10 grand, 538. Let's try to 110. 76 times 100 shares cost you $21,076 to actually buy an investment in Lowe's right now. I mean, I would go into an index fund or ETF, like I always say, for companies that got over $200 worth in shares, are pretty much like Tesla and all them. Totally up to you to invest in. Totally up to you. But if I was to do it, ETF or index fund, or if not weekly, it's available. But this is just all advice. You can invest the way you want to that make you feel more comfortable. So I hope you enjoyed the video. I'm going to catch you guys on the next one.